Welcome back. You're watching our continuing coverage here at Davos 2023. Joining me now is Gita Gopinath. Gita, thanks very much for joining me. Does the year look any better at this point in time in terms of the indications that you're picking up? I've heard many CEOs talk about no recession. Some talk about a mild recession. Some saying that it's possibly just going to be slower growth for the next 12 months.
Hi, Shireen. Always a pleasure to join you. If I were to describe our outlook for 2023 in one line, it would be that we see a tough year ahead, but with signs of resilience.
Okay.
So we have a tough year because we still have the war and its consequences. We have inflation that has been coming down, but still is high. And we have climate shocks and COVID shocks still around the world. But the resilience is coming from strong job markets in many countries, consumption holding up. And so the way we see it is we have global growth projected to bottom out this year. So the second half of this year, it starts improving and then rebounds in 2024. So, we have some positive things to look forward to in the second half of this year and going forward.
Speaking of the positives, and you said consumption is holding, the labor market continues to be resilient at this point in time. What could possibly turn that around? I mean, we are now living in an era of high interest rates and high inflation, something that corporations are not used to, the global economy is not used to. What do you see as being the long-term implications, the fallouts of this new environment?
So what we will see, but we haven't seen so far, like you said, is softness in the labor market. Now, we've had substantial monetary policy tightening. One of the reasons we expect global growth to decline this year is because we will see the effects of those tight monetary policy that usually plays out with a lag. So we will likely see it in labor markets. We will see unemployment rates going up. Now, the question is, how much will it have to go up by? The view is that if there is weakness, it will be not substantial, but we'll wait and see about that. I think another factor that's affecting the outlook is China, because China has moved pretty strongly away from its zero COVID policy. So we're going to have a couple of months where conditions will be tough in China, but then we expect to see a rebound in China too.
Do you believe that this rebound is likely to be sustainable as far as China is concerned? Because they do have significant problems.
So China does have other issues. When you look at the property sector, for instance, we see a crisis there. But that said, you looked at the most recent numbers that came out for China in terms of its growth for 22, which was around 3%, very low. Relative to that, we certainly will have a rebound this year.
Let's talk about India as well, because that continues to be spoken of as the bright spot, an economy that's been fairly resilient over the past 12 months or so. What's the expectation now, not just in terms of growth, but also the opportunities that India can leverage on in the context of this reshaping that we are seeing at this point in time?
So India is doing relatively well when you compare it to other economies in the world. In terms of our growth numbers, we have 6.8% for this fiscal and 6.1% for next. But again, looking ahead, I see a lot of businesses, a lot of companies who are looking to India as an investment destination as they try to diversify away from other countries, including China. So this is a good time for India in terms of being able to draw more of the global supply chain towards India. India also has the G20 presidency, so there's, it is very much on the world stage.
It is on the world stage. But in terms of what it would in fact take to get more manufacturing FDI into India, as we see these shifts that are taking place, and some of these shifts could perhaps be structural in nature. I'll get to that in just a second. What more do you believe would need to be done, if anything at all, on the policy front?
So on the plus side, there's been a lot of progress on the physical infrastructure, a lot of progress on the digital public infrastructure, and I think both of those are making India more attractive as a destination at this point. In terms of issues that still need to be addressed, I would say labor markets, more labor force participation, certainly from women, reducing the youth unemployment rate, just getting labor markets to be somewhat more flexible, more resilient would be very helpful. We still need land reforms in India. That's another area. But a lot of action has been taken. Like I said, there's a lot of positive sentiment towards India.
Let's talk about the big threat that you warned the world of here just at the start of Davos, and that is greater fragmentation. And the theme here in Davos is to foster and nurture greater collaboration so that we don't go down that path. How real do you believe that threat is in the short term, and what is its impact going to be?
I mean, I think it's very important for you know, events like Davos, where it brings together the public sector, the private sector, to help prevent such a fragmentation from happening. That said, I think the pandemic and the war has made all countries much more concerned about economic security and national security, and that's causing them to undertake policies that, you know, could lead to greater fragmentation around the world. There are very serious costs if this becomes runaway fragmentation and we have decoupling around the world into different economic blocks. I mean, the cost in terms of world GDP could be around loss of 7% of GDP, which is basically like losing the economies of Germany and Japan on a permanent basis. So that is very costly, and it's something that we are, you know, advising countries just to be very careful about, that when they put policies in place, that they recognize that this can have very big spillovers to the rest of the world.
But do they recognize the impact that you just spoke of? Or at this point in time, given how fractured the world is and the lack of dialogue between large blocs, you know, is this threat imminent?
I think people do recognize that there is a serious risk. A good sign was last November at the G20 Leaders Summit, when President Biden and President Xi Jinping met after a very long time. The whole point of that meeting was to put a floor on their relationship, because it's so important for the two largest economies of the world to work together. So I do think they're aware of it, but I still worry that you know, policies will not necessarily move in the right direction. So we are worried about that.
Gita, let me end by asking, you said 2023 is going to be a tough year. How tough of a year is it going to be for central banks? You know, we were just talking about how, in a way, central banks now have front and center the one objective that they have to deal with, which is inflation management, and not take on any further obligations. How tough is the year going to be for central banks?
I think it's going to be a tough year because they're going to have to make the decision about how long to keep monetary policy restricted. As you can see, markets are very eager to escape the tight monetary policy environment, and based on their expectations, you know, inflation will come down very quickly and interest rates they will start cutting interest rates. I think it's premature to make that conclusion, and monetary policy will have to keep fighting that narrative.
And it's going to be a while before we see that stopping, you think?
I mean, again, we have to see what the inflation data brings in. But as of now, I think they would have to keep, the US, for instance, would have to keep interest rates at around 5% through 2023.
Gita Gopinath, always a pleasure. Appreciate you joining us here on CNBC-TV18. Thanks very much for your time.
Thank you.
Well, we are going to take a break, but continue our conversations here on Davos 2023. Don't go anywhere. We're back in a minute with more.